Okay, so most of the quiz reviews I actually have on PowerPoint. I still work through them, but this one I'm actually able to type out, although I do have my tablet working now. My pen, okay. So what we're going to do is we're going to walk through everything that's on the quiz. Now, that being said, I completely know several things. One is that this is only Friday in a holiday week. You got a late start on the course. You have family that are, you know, around. I also know that it ends up right before Christmas, so this is kind of a really crazy time for everybody. I also know that everything here is brand new. So the first thing that I suggest is that you get out your resource sheet that's in your book, that's on page, like, that used to be on 69, ironically, I did not make that up. So that you have what we're going to use for debits and credits, because you're going to think through journal entries. Now, I know that you're not ready to take the quiz right now because it's only a 4-week class. You wouldn't be ready on Friday. So 2 things are going to happen while we review. One is we're going to be talking about the information and going over the information again as examples. So I don't expect you to get everything right. This is a learning process. Okay, does that make sense? We're not to the assessment piece, it's a learning process. Okay, so the first question, I'm going to ask I am sharing the quiz review, right?
Yeah.
Okay, and then I will post this, the review, actually. I'm just going to save it blank to make sure I have the blank saving. So I will post this both blank and also with writing on it so that you have the option of using it to review for yourself without looking at the answers before you ever have to take the quiz. I'll just throw it on the desktop. And then I'll post the recording also so that if you ever get stuck, you have it piece by piece and you can forward through wherever you want to in the recording. Okay, so the first thing that you have to do on the quiz is you're going to have to find the missing amount. This is exactly like our practice and our homework. So the accounting equation we're going to review. Can anyone tell me what the accounting equation is?
Assets equal liability and equity.
Yep. So assets equal liabilities plus owner's equity. So let's say, as an example, let's say that we have $50,000 in assets and $20,000 in liabilities. And we want to know how much is equity. I can't type as fast as you can figure it out. Okay, so this is given to us. Assets are $50,000. Did we do anything with liabilities?
What's it?
20,000, right?
Yes.
So what is owner's equity?
You want the answer or how to get there?
Right, so 50 minus 20, so we have 30,000. Now, just for like your own information, right? I'm going to point out that you can rearrange this equation. So this equation can be rearranged as assets minus liabilities equals equity. I'm just going to take a shortcut and call it equity. It could be assets minus equity equals liabilities. It can be liabilities. Yeah, that's pretty much the common ways of rearranging it. So you can rearrange it any way you need to. All right, are we good with this one? The first one will be simple. It won't be expanded.
Yes.
Yes.
Wait, you have to talk. You're okay or you're not quite okay?
I'm good.
So far, so good.
Okay. Okay. Okay, the next one is we have to be able to plug in return on assets. So for return on assets, we're going to use a formula. And the formula for return on assets is net income divided by total assets. So there's two things that could happen here. You might be given the net income number, and you might be given the total assets, so you can just plug it in. Or you might have to figure out what net equity is, what net income is, or what total assets are. So you need to know that net income is our income statement, which is revenue minus expenses. And if you need a list of assets, which you're going to need sometime in the test, you could look at a balance sheet in your book. You could look at the PowerPoint slides, or you could look at our resource sheet that we talked about. All of those will help you identify what an asset is so that you don't accidentally do a liability. I think this one's pretty straightforward, but a lot of the test will still have to do with account identification. Okay, does this work?
Real
Yes, it
quick,
works.
the resource sheet, where's that at?
So if you go into, well, first of all, I posted in the announcements.
Okay.
Okay, there's two of them. One is in your book and in the PowerPoint slide. That one is the one that has, I'm going to just put this up here. You need one is in the announcements and the course resources. That's the one that's the accounting equation with sample accounts. Okay. The other is in the PowerPoint and your book, page 69. And that is the expanded accounting equation with debits and credits. So you want both of those out before you take the quiz. Does that help?
Yes.
Okay. Now, we want to figure out the effect on the accounting equation for receiving cash in exchange for stock. Okay, so the effect on the accounting equation for receiving cash in exchange for stock. So we're not doing a journal entry yet. So let me give you an example. Let's say the company received $50,000 cash in exchange for common stock. Now, I'm going to write down the 5 thought processes. So the first one is what happened. And if you put that in your own words, you're kind of picturing, okay, an investor came in, he wrote a $50,000 check, we put it in the bank, we gave him stock, now he's a part owner, and we have an additional $50,000. Make sense there? Are we good there? The what happened part is really important because it doesn't feel important because you're not writing anything down, but if you start, you'll get everything else wrong. Okay, so the second thing is, what accounts are affected? And so here we're going to say what two accounts, there's always at least two, sometimes there's more, but what two accounts are affected here?
Assets, equity.
Okay, but not type of account, the actual account. So one of them is cash,
Cash.
and the other
Okay.
one is
Common stocks.
Stock.
common stock. Okay, and I'm going to keep going with those, even though I'm going to keep writing my questions down here. So the next one is, did each increase or decrease? So I'm going to go back here and I'm going to say, okay, cash. Do we less?
I'm sorry, you cut out. What'd you say?
Now, my headset's still not working. I don't know why.
Oh, that was a little bit better.
Trying to put the mic closer to my ear. Does that work better?
Yes, that's right.
Okay. Do we have more cash now or less?
More cash.
We have more. Yeah, we have more. So that increased. Okay, so I'm going to put increase on my sheet of paper. I just put an up arrow. Increased. Common stock. This is a tricky one. Does the company have more common stock or less?
Would it be less?
That's why I said it's tricky. Okay, so common stock and expenses work the same way. So it feels like we have less because we gave some of it away, right? But what we're really keeping track of as the company is we're really keeping track of how much is our equity building, our expenses building. Before both of them actually increase. Expenses are easier to understand because if I ask what was our rent, I want to know, the rent for every month and the total this year. So it grows, right? Equity is the same way. Every single person we let in increases the equity that's in the company. So even though we're giving out stock, issuing stock is just a record of the equity in the company. So common stock also increased. Does that make sense? Okay. So did each increase or decrease? Now, the next thing I ask myself is, what type of account is each? So what type of account is each? Now I'm asking, is it an asset, a liability? And we don't want to just say equity at this point because now we know that revenue and expenses are both part of equity, but they behave differently with debits and credits. And we know that capital contributions and withdrawals are both equity, but they behave differently with debits and credits. So what type of account is cash?
Asset.
It's an asset. Yep. And I do not expect this to come automatically to any of you. What type? So for common stock, I would say, yes, I know it's equity, but I'm going to say it's common stock because when I look at that resource sheet and I want to know, do I debit it or credit it? Then I want to know it's common stock. Now, here's the beauty of doing the thought process this way. The last piece is debit or credit. So cash, I don't have to know, do I debit or credit cash? I just have to know I increased an asset. Now you look at your resource sheet. If I increase an asset, do I debit it or credit it?
Debit.
I debit it. So I know I'm going to debit cash. If I increase common stock, do I debit it or credit it? Resource sheet.
What,
The
common
credit?
stock?
Credit.
Hold on. I heard everyone talked at the same time, which is good. I want you to talk, but I couldn't figure out what you said.
I believe it's credit.
It's a credit. It is absolutely a credit. And there's a couple of hints there. One is that a journal entry the debits and the credits has to equal. The accounting equation has to always balance, and debits and credits have to always be equal. There's never an exception to that. However, when everything's new, it's much better to think through both sides than to just say, okay, I got that one, so the other one must such and such. Although by the time I got into like intermediate accounting 1, I did use like cash as a crutch that way because you learn the common transactions more frequently. So I knew what cash was. Okay, so that's the 5-step thought process. So now we're not asked to do the journal entry. All we're asked to do is put it with the accounting equation. We have assets equal liabilities plus, it just occurred to me that I might be perpetuating what I hate. When you guys are writing a paper or something, assets, liabilities, and owner's equity, they're not capitalized. That's like saying chair. It's just a thing, so it's not capitalized. All right, so asset was cash, and we increased it $50,000. So I have plus $50,000. I didn't do anything to liabilities, but to owner's equity, I increased it $50,000. So the first question I have is, does my accounting equation balance?
Yes.
Yes, it has to. If it doesn't, you're wrong. You did something wrong. So that's it. That's the last piece of the question. This is what the answer would be. All right. How do you feel about this?
Good.
Okay. All right, now this gets a little bit trickier. So here you're given a few asset account balances and you're given the balance for equity and you have to calculate the balance of liability. Okay, so it works exactly like number 1. The difference is you have to be able to identify accounts. I should say classify accounts. You have to know what accounts are assets. You might also have to know that, but I don't think so, that equity is revenue minus expenses plus contributions minus dividends or stock and dividends. So other than that, it's exactly the same. You just have to first make sure that you know what has to do with assets. You have to be able to identify asset accounts. Everything else is just the same, except when you do it, you're going to have 2 or 3 numbers under assets. Does that make sense?
Mhm.
Do you feel good here?
Yep.
Brian, are you okay?
Ish.
Ish. Okay. Because I'm going to have a safety net for you. Okay. Accounts affected and whether they increase or decrease when a service is performed and the client is billed. So service is performed and the client is billed. So let's do an example. Let's say we performed a radiator replacement. I was thinking, let's make something that appeals to the guys. Let's do a car thing. And then all of a sudden it's like, what car thing would it be? And billed the customer 500?
Yeah.
Okay. Because then it occurred to me, I don't know what it costs. My husband can change them, so I'm lucky. Okay, so we performed a radiator replacement and we billed the customer $500. Now, my first question is really important. Have we earned any revenue?
Yes.
Yeah.
Not,
What did it? No, go ahead.
Okay, I really got confused because I guess I'm moving a little too fast. I was gonna say not yet because I was thinking about, I guess, accounts receivable. I don't know, I might be going a little too far.
No, you're right.
Okay.
No, you're right also. So we earn, you're right about accounts receivable. So we earn revenue when we perform a service or supply a product. It does not matter when or if we get paid. Okay, so we decided we performed a service. Now, what two accounts are affected? And Tatiana, did I pronounce that correctly?
That's it.
Okay, Tatiana came up with one, which is accounts receivable. And when you're doing these, make really certain that you keep accounts receivable straight from accounts payable. So ask yourself, are we getting something or are we paying something? They're going to pay us, so that's an account receivable. What is the other account?
You mean like for accounts payable, or are you talking about cash?
No, for this transaction. So we
Service revenue.
replace the,
Service revenue?
Yep, we'll use service revenue. There's service revenue is easy. There aren't that many things to use. Now, in the real world, I mean, like I work for a practice management company, and I mean, the revenue is broken down. I had pages and pages and pages of revenue accounts, but it all works the same. All right, so I have accounts receivable and service revenue. Do I have more receivable now or less?
More.
I have more. They're gonna pay us. I have more that someone's gonna pay us than before. Did my service revenue increase or decrease?
Increased.
It increased. Okay, so now, what type of account is accounts receivable?
It's an asset.
It is an asset. What type of account is service revenue?
Owner equity? Or
Yep,
revenue?
and I'm going to put revenue and equity because I have to look for service revenue. Now, if I increase an asset, look at your resource sheet. If I increase an asset, do I debit it or credit it?
Debit.
I debit it. You are correct. And your dog liked that answer too.
Yeah. Sorry about that.
He agreed too. He's learning accounting.
Mm-hmm.
The revenue, if I increase revenue, do I debit it or credit it?
Credit.
Credit. So first of all, I'm really glad because my debits are the same as my credits. We would just want to know the accounts that are affected and whether they increase or decrease. So we already did that with accounts receivable increase. You notice I won't just let you stop at that though. And service revenue increase. And remember, all of the choices are going to be multiple choice on the test, but I got to tell you something. I wish I could tell you why, because you've probably noticed, even though we've only known each other a couple of days, but you've probably noticed that I do try to explain why. It's important to me to be able to explain why. When you take a multiple choice test in accounting, we have been taught to take tests where you go and you eliminate the things that you know aren't correct. Now you've got a 50% shot, and so you take that, right? I don't know why, but with accounting tests, you are going to be more successful. Answers. You just read the question, you work out the answer, and then you go look for it. And the same thing goes when you're reviewing. For some reason, it doesn't work well. Normally with tests, when you go to review them, you know, you can read the question and ask yourself, does that answer seem like it could be the answer? With an accounting test, you really have to work it again. So when you just go and double check things that you aren't sure of, you oftentimes put down the wrong answer, more oftentimes in accounting than in other classes, and I don't know why. But I do know that when I studied for the CPA exam, after all of those accounting classes that I took, there were 5 stacks this thick of old test questions, and I worked all of them. And when I was in grad school, we did everything in groups, something in a group. And so I didn't take this class that my group did. So I worked the final with them because we were a group. And I even wrote out, it was this simple, and I even wrote it out on the side just to make sure I didn't do something, to stop thinking for a second and do something wrong. So that's that advice. I don't know why it's different. I do know all the test taking rules. All right, number 6. We want to calculate net income. Now, this sounds really simple. We want to calculate net income. We're given investments, dividends, revenue, and expense. So the first thing, you can already see what I crossed out for you. The first thing that you have to realize is net income equals revenue minus expenses. I should point out that as long as revenue is more than expenses, if it's less than expenses, you have a net loss. But so net income is revenue and expenses. This is the income statement. Investments are not income. Now, the reason investments are not income is because they are not generated by operating the business. So those aren't considered income. In order to have income, it has to be in the general course of operating the business. And then dividends, remember we talked about this. I know you don't remember. Some of you will, some of you won't, and that's okay. They are a reduction in equity and not an expense. So even though we write a check for them, when we send them out, they are not an expense. We're just reducing the equity from the person that owns the company because we're giving back to them money that was retained in the business. All right, are we good there?
Mm-hmm.
Okay, now this is a cash flow statement. So there are 3 sections on the cash flow statement. There's operating. Yep.
So I was going to say real quick, back number 6. I just want to make sure I have this right. Dividends. If I'm a sole proprietor of my business and I have 10 employees, right?
Mm-hmm.
When I pay myself back, that's a dividend, right?
No, it depends on how you set it up. So
Okay.
When you have your own company, if it's a sole proprietorship, then you can take money out for yourself, right? You can just simply take it out, and if you do that, it's a draw. If you write it out as a paycheck and give yourself a W-2, now you're working like an employee. I mean, either way, you're an employee, right?
Mm-hmm.
So it's either or. But there's something really important that you should look up there. I would never be, and I'm not saying you are, but I'm just going to throw this out here. I would never be a sole proprietorship. A limited liability company gives you the protection of a corporation with the freedom of a sole proprietorship. Just to mention it while we're here. But yes, that's an owner withdrawal. Just like if you came in and you're like, darn, payroll's due, and I haven't gotten that check from the customer yet, I'm just going to go put my own money in the bank to pay my employees. You've made a contribution.
Okay.
That makes sense?
Mm-hmm. But every other employee is always going to be salary.
The other employees are always going to be salaries or wages. Yeah, always. You will write them paychecks, and that's salary or wage expense. And
what is that, like wages and salaries? The only difference is whether or not someone's actually salaried or hourly, correct? Or commission based?
Yeah. When you're talking about wages or salary, they'll often say, when they say wage, it doesn't make any difference in the journal entries, but when they say wages, you're typically talking about somebody that is a non-exempt worker, and then salary is exempt. But a lot of companies will just say them interchangeably too. But yeah, normally hourly is labor or wages, and salary is salary.
Yeah, because I saw both of them on a expense on one of the what is it, like the little practice work problems or whatever, and I was like, aren't they the same thing? So I saw wages and I saw salary, so I was like, why are those two different?
Okay, so like for instance, on the finance committee for the Detroit Skating Club, when I look at the section on there for the, salary and wages expense, the difference between the two, I can see, okay, this is where our maintenance people and our hourly people are getting paid, and that other one, I know I know exactly who's in that, so I know about how much they make. I mean, I can ask how much they make. I do know exactly how much they make, but that's what it would look like on the financial statement.
But so for accounting, it doesn't matter because it could change from one company to another depending on how they break it down.
It can.
So there's no actual accounting way of like, this is how it's always going to be. It's like whatever company classifies them as.
But it'll be clear. They don't use weird titles or anything. But this is why when I used to go to work in accounting for a new company, the first thing I would do is go through their chart of accounts, because their chart of accounts will tell me what types of assets they have, what types of liabilities, where they get all the revenue from, all the categories, what type of expenses they incur. I mean, basically, you can get a lot of information out of a chart of accounts. So that's exactly right.
Okay.
Your paper is going to be fun. Okay, so we have these three sections. The purpose of the cash flow statement is to show how much cash came in and how much cash came out from each type of, like, each part of the business. So let's say that this, cash flows, we had a cash inflow from operations of $75,000. So what that means is, of all the things that we spent and brought in, we ended up with the net $75,000 in cash just from operating the business. And let's say that we lost money in our investments. So we spent on investments $50,000 because we were feeling really good about the $75,000. And then we had an inflow from financing because we took out a revolving line of credit. I'll just say it. 50,000. That'll be confusing. 60,000. All right, so what we're going to do is we want to know how much did cash change from the beginning of the period to the end of the period. So we're saying, okay, from operations, we have $75,000 that came in. And then we had an outflow of $50,000 for investments. And then we had an inflow, so we added $60,000 from financing. Like we borrowed the money from a bank or we sold more stock. So we had $75,000 come in, but 50 went out of that, so that leaves us with 25, plus then we brought in another 60. So that means that we had a net inflow of $85,000. Or in other words, cash increase $85,000. The purpose of the cash flow statement is because the income statement is all done according to accrual accounting. So you could have income without having them pay you yet, right? And if you have a problem with collections, then your income might look good, but it really doesn't do you any good to have income if they're not paying you. And expenses, you can have expenses that are incurred, but you haven't sent the check yet. And so it's possible to have a good-looking income statement, but not have enough money, cash money turning to continue successfully operating the business. That's the purpose in the cash flow statement. Okay, number 8, journal entry to record services performed when the customer is billed. So services performed when the customer is billed. So I did an example here where it's just, okay, we videotaped a wedding worth $5,000 and we billed a customer. We did one like this. So what 2 accounts are affected?
Accounts receivable. Debit accounts receivable.
Mm-hmm. And?
I think you're going to credit the service revenue.
Service revenue. Good on both accounts. So what type of, did accounts receivable increase or decrease?
Increases.
It increased. What about service revenue? Did we increase service revenue?
Yes.
Sure did. What type of account is accounts receivable?
That's it.
Mm-hmm. What type of account is service revenue?
Revenue and equity.
Yep. I'm going to put revenue and equity so you know where to look on your resource sheet. So if I increase an asset, do I debit it or credit it?
Debit.
Debit. Yep. Good job. And you already said correctly, if I increase revenue, I credit it. All right, so now it's just a matter of me writing down the journal entry. So I'm going to debit accounts receivable for $5,000. Notice that when I do journal entries, I don't put any dollar signs. I'm going to go into the right sum because we know that credit means right. Also, in the real world, you really do, in textbooks, you never do because it's just redundant, but in the real world, you really do rely on your explanations for the journal entry. So every time you do a journal entry, you do write an explanation. So that's our journal entry, increased accounts receivable and increased service revenue. How are we here? Are we good?
Yeah, and you said for like explanations, you can do, that's where like with the software now, you can actually even upload or like link source documents for like purchases or receipts and stuff, right?
Yeah, okay, so, well, yes. Okay, but what you're gonna see next week, you can't do. So what what happens here is when you're looking at a computer program, the best students have the hardest time because the computer always knows half of what you're doing. So here you'll invoice the customer and they know, oh, okay, that's an account receivable. We just sent an invoice. You put a code in there that when it's put in the computer, when it goes in there, it says, and the other side is this particular revenue account. Yeah, we'll talk about that more later. You still have to know how to do journal entries. Computers don't handle everything, and you have to have them for adjusting entries. You have to be able to look at them. And I'm not just saying that because I'm teaching it to you. I'm saying it because when I started teaching accounting years ago, and because I developed courses and I work as a dean, I have said many times, is this the best way to do it? And you simply have to know journal entries. There, that was my soapbox. Okay, another example. Journal entry to record utilities paid with cash. So you have to think about what happened. Okay, utilities were paid with cash. So we had the utilities and we wrote a check for them. All right, what two accounts are affected?
Utilities expenses debited.
Yeah, and it is. What's the other account?
Cash.
What did we,
Credit.
cash. The other account is cash. We paid with cash. You're good at this. Utilities expense. Did it increase or decrease?
Increased.
Increase?
Yeah, utilities expense. Yeah, that increased.
It increased. Yeah, and this, well, the reason I asked is this one is the one that's confusing, like equity, because it seems like, well, I paid it off, so it would go down, but the expense that we incurred didn't go down. Cash went down. All right, you already said an expense is an expense and equity, and cash is an asset. And I already heard if I increase an expense, I debit it.
Mhm.
If I decrease an asset, I credit it. So my journal entry is going to look like, I'm going to debit utilities expense, or I don't know how much, and I'm going to go into the right because that's what cash credit means, and I'm going to do cash for I don't know how much, but I do know it's going to be the same number of X's because the number of X's in journal entries always balance. All right, do we feel good with that one?
Yes.
Okay, this next one is confusing because errors are always confusing because they can go either direction. So here's the way I work them. I say, okay, what is the resulting error if a $22 credit to sales was posted as a $220 credit? Okay, so the first thing I think is sales increase with a credit. So a $22 credit to sales was posted when it should have been, was posted as 220. Too much was posted to sales. Okay, so now I'm thinking, all right, so correct was 220. Incorrect was 22. So what do I have to do with that? And I would now work it as a math problem where, but I'm just going to put it over here and I'll just say, okay, so now it's 220 minus 22. So 198, right? Okay, so now I'm saying, okay, so correct would have been 222 and incorrect was 22.
Is
So I
that,
have to increase it.
is that right? The correct is 220 and the incorrect is 22. The way I'm reading it, the question
Where's
seems
the
different.
resulting error if a $22 credit to sales? Oh, you're right. So I'm going to say sales increases with a credit. Okay. Not enough was added to sales. Incorrect was 220 and was 22. So now I'm like, okay, now I know the information. So if incorrect was 220 and correct was 22, then the difference is 198. And then I look at it and I say, okay, incorrect was 220. So I didn't do 198 enough. And it's a credit to sales. Credit sales, $198.
Surplus, yeah.
Does that make sense?
Yeah. It's going to throw your accounts receivable off and throw your equation.
Right. Now, the truth is, in computerized accounting system, what you can't do is put something in out of balance.
Mm-hmm.
What you can do is put the wrong number in. What you can do is use the wrong account, but it's hard to put something in with the wrong balance, at least if you're only going to do it on one side. However, errors happen all the time in bank statements, which even though you don't use them at home anymore, you will still use them there. And I used to say that banks don't make mistakes, but that was before I had to give up about 20 hours of my own life over 3 months trying to decipher the bank's mistakes. 3 months in a row. It was 3 months, I don't know. I should have been gone after the first month. It was for a business. It was when all the banks were merging. Okay, number 11. Calculate total equity given common stock. They'll give you a list of various asset balances and net income. Okay, so you want to calculate. So what you need for common stock, I'm not giving you liabilities or anything. What you need is they give you pieces of total equity. So they're giving you common stock. They're giving you dividends because they said there are no dividends. They're not giving you revenue and expenses separately, but they are giving you revenue and expenses because revenue minus expense is net income. So what you have to do is simply put together the accounting equation. You have to know that assets don't belong there and what an asset account looks like. Although here it doesn't give you a lot of different accounts, so that part should be okay. All right, does everyone feel like they can do that?
Yeah, you just take the common stock and the net income and add them together since dividends are zero, right? And that's total equity.
Yep, that's all you need.
Simple.
Journal entry to record an expense we paid with cash. So let's say that we paid salaries with cash. What two accounts are affected? Oops.
Expenses for wage.
What type of expense for salaries?
Or salaries.
Yes. Yeah, these account names aren't magical. I mean, you'll see all the same ones in your accounting book, but in the real world, I mean, they're just descriptive of what they are. And so what's the second account?
You're going to credit cash.
Cash. So salary expense, did it increase or decrease?
Increase.
Yeah,
Increase.
expense.
It's an expense, it increased. did cash is an, did cash increase or expenses? Okay, did cash increase or decrease? I'm getting tired. Oh no, it's just a long word. Okay, did cash increase or decrease?
Decrease.
It decreased because we paid the salaries. Okay, what type of account is cash?
Asset.
An asset, right? I mean, cash is an asset. It's one of the first that you'll learn, that you'll memorize. What type of account is expense?
Expense equity.
And yep, you're nailing this.
Okay, I just have one question. So you have account, which is your salary expense, and then the cash, and then when you say type of account, you're looking for either asset, liability, equity.
Yep, the
Okay.
classification of the account, the type of account, exactly.
Got it.
All right, so if I increase an expense, do I debit it or credit it?
Debit.
What was that?
Debit. Mm-hmm. If I decrease an asset, do I debit it or credit it?
Credit.
Yep. I'm going to credit it. Okay, so what this is going to look like when I do my journal entry is I'm just going to say, I'm going to debit salary expense, and I'm going to credit cash for $500. So I increase salary expense and I decrease cash. Do you feel good with that? Are we good there?
Yes.
Okay. Now we're going to do a journal entry to record supplies purchased for cash. So this is what happened. So we went down to the office supplies. I need water. Went down to the office supply store. We gave them a $300 check, and we came home with a new printer and just office supplies, right?
Mm-hmm.
What two accounts are affected?
It's going to be office supplies debited and then credited cash.
I don't know how you're getting this. You've been working. Actually, I do know how you're getting this. That's always the answer. What type of account is office? Did office supplies increase or decrease?
Increase.
Increase.
Did cash increase or decrease?
Decrease.
Decrease.
What type of account is office supplies?
Assets. Asset.
Because I want to show you something with this. Mm-hmm. What type of account is cash?
Asset.
Mm-hmm. Okay, so what I wanted to show you here is with the accounting equation, which I know we're going to do a journal entry. I'll just shorten this. It's okay for only one side of the accounting equation to be affected, because here we have cash went down $300 to pay for the office supplies, but we now have $300 more asset in office supplies. So it still balances, right?
Mm-hmm.
You don't, it doesn't have to be two sides of the accounting equation. You can have a transaction on one side of the equation and you're okay. I just wanted to point that out. Now we'll do the journal entry for them.
Yeah, it's only real important for the journal stuff, right? That you recorded always as a debit, then a credit, correct?
Yes, with the journal entries, you have to have, you can have more than two accounts. If you have more than two accounts, you might have two debits and one credit, but they will always equal the same.
Yeah.
So we are going to If I increase an asset, do I debit it or credit it?
Debit.
Debit.
Decrease an asset, do I debit it or credit it?
Credit. Credit.
I'm going to credit. Yeah, no, you're right. You're totally right. Even though they're both assets, that's okay. That's what we just looked at with the accounting equation. So the way this is going to work when we do the journal entry is we're going to debit office supplies. So I have more office supplies now. And I'm going to credit cash. So I have less cash now because I bought the office supplies. So that makes sense, right?
Mm-hmm.
Yeah, it just seems a little bit different when we first look at it. Okay, for this one, you're given various asset and liability balances, and you have to calculate equity. Okay, so you have to do two things here. You have to use the accounting equation. I'll tell you some other things that you have to remember. The equity has 4 parts. Plus revenue minus expenses plus contribution minus dividends. And you must be able to identify assets and liabilities. So when you do this, like the assets, for example, may have more than one number under them. They probably will have. Does that make sense?
Mm-hmm.
Okay, identify, so a trial balance, the purpose of a trial balance is to identify that debits and credits are equal, and we use them in the real world. So balance is a list of all of the debits and all of the credits for all of the accounts. It's a list of accounts starting with assets and then liabilities and then revenue and expense and dividends. And it looks jagged because first you have your assets that are normally debits, and then, but when you haven't learned that yet, when you go to liabilities, now they're credits, so they jump over to the other side, and then when you get to capital, it stays there, but dividends, they go back over to the left. So the account, the trial balance itself looks very odd because the numbers are all jagged. All right, but the whole purpose is for debits to equal credits. So there are several options that you're given on the test, and you have to identify which one of these require the trial balance to be out of balance. So what we have to think through is, well, what would make that trial balance out of balance? If I didn't record a journal entry, would my trial balance balance?
No.
No, now there's a difference between it being correct and with it being in balance. So if I just didn't record a journal entry at all, I don't increase my debits or my credits, right? Now, my accounting records are wrong.
But it would balance?
But it still balances.
Okay.
So what if I recorded a journal entry that should have been $70, but both my debit and credits are $70 or $700? Does it balance?
It would balance, right?
Yeah, it would
But
balance.
it's not the
It
right
would still be
number.
wrong. Right, wrong numbers. So if I took a journal entry and I accidentally recorded it twice, would it balance?
Yes.
Yeah, it would still balance. It would be wrong, but it would balance. So when you're looking at this, you're basically looking for the example that has a different debit amount from its credit amount. Okay, and then this number 16 is the same way, and you might have different versions of this. So you can't just look at this and remember, oh, I said increase, because in your case it might be decrease. What is the effect on the trial balance if both the debit and the credit are recorded as debit? So first of all, it's out of balance. Now, both the debits and the credits are recorded as debits. So then the debits are too high. Credits are too low. Does that make sense? So you could have a couple of different variations of that, but that's the thought process so that you can isolate the answer. Okay, you have to calculate return on assets exactly the same as number 2. Here, given cash, buildings, equipment, and liabilities, calculate equity. So here, you simply have to know what type of account is cash.
Asset.
Asset.
Yep. What type of account is buildings?
Asset.
Mm-hmm. And what type of account is, oh, well, this just says liabilities. So you just have to know that cash and buildings are both assets to answer this accurately.
And, yep,
Does
and
that make
equipment.
sense? Oh, that was the third one. There we go. It even has a blue line under it. Why is that? Oh, because it wants a comma after it. That's controversial. Okay. 19. We're getting close. Journal entry to record office supplies purchased on credit. So we bought $500. Didn't we just do this one? Oh, for
We did a
cash.
variation
Okay.
of it.
Yeah, cash. Okay, we bought, yeah, and the journal entry before that was 500 instead of 300. That's what I'm thinking of. We bought $500 worth of office supplies, and they are billing us for them. What 2 accounts are affected?
Office supplies and then accounts payable.
There you go.
Yes. Wonderful. Did office supplies increase or decrease?
Increase.
Mm-hmm. Accounts payable, did that increase or decrease?
Increase.
Yep. What type of account is office supplies
Asset.
in our accounting bubble? Yeah, in our accounting bubble, it's an asset. What type of account is accounts payable?
Liability.
Yep. If I increase an asset, do I debit it or credit it?
Debit.
Debit.
Mm-hmm. If I increase a liability, do I debit it or credit it?
Credit.
Yep. Okay, so now we are still going to debit office supplies. So in both journal entries like this, office supplies was the debit because we came home with those. The difference was before we paid cash, so we reduced cash. Now we're increasing a liability. All right, how do you feel? Are we good here?
Yep.
Okay. Okay. Now we're almost done. Now we're going to that'll work. Record a journal entry to record a telephone bill paid with cash. So the first thing you have to think about is, okay, I have this phone bill and I'm handing over cash. What two accounts are affected?
Utilities expense.
What?
Utilities expense, and then
Yes,
cash.
yes, yes, yes. Did utilities expense increase or decrease?
Increase.
It did. Did cash increase or decrease?
Decrease.
Yeah, because we paid it. What type of account is utilities expense?
Equity.
Okay. 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 So so here's why students get liabilities and expenses confused. When you have an expense, one of two things happens. You either pay cash now, or you have a liability to pay later. So here we have a telephone bill. That's an expense. We're paying it now, so cash is going down. If we had a telephone bill and we're going to pay it later, we would have utilities payable. So that's how it works. You have to have an expense that you haven't paid that you're going to pay later, and that's the liability. But that's why that's confusing. Equity expense decrease. What type of account is cash?
Asset.
Yep. Okay. If we increase an expense, do we debit it or credit it?
Debit.
Debit.
Debit. Increase in expense, debit it. It's on the right-hand side, but it behaves like the left-hand side because it decreases equity. If we decrease an asset, do we debit it or credit it?
Credit.
Yep. Okay, so now for my journal entry, I'm going to debit utilities expense. And I'm going to cash for $300. All right, does this one make sense?
Yes.
You have to be able to add up a T account exactly like in the homework. Remember, you add up both sides. You subtract the smaller from the larger, and then figure out, is it a debit balance or a credit balance? And you're looking for one balance. Like when I said, how much cash do you have? Just one. Calculate, number 22, calculate the ending accounts payable balance given transactions affecting accounts payable as well as transactions that are not related. So, and I'm not going to say this is an inclusive list, but for the most part, this is where you want to ask yourself what happened. Put it in your head. When you're looking at this, one of the things that you should be thinking about is we need to get a payable, you by borrowing or buying. So think about, so you should be incurring an asset. So picture what you're doing, and then when you read through the transactions, you'll see, oh wait, that's not a payable, or you could be paying off a payable. Okay, 23 and 24 are the same. They're 6 different, the first one are 6 different transactions, and you have to figure out what is the total effect on stockholders' equity. They're just like the homework. When you go through these 6 transactions, I strongly encourage you to write it out using the accounting equation, because it will help you make sure that you put the expenses and the revenue under stockholders' equity. And then you have to calculate the debt ratio. Okay, I'm going to tell you a couple of things. One is, I'm going to stop sharing so we can all see each other. Okay, I am going to post this review sheet filled out and not filled out for you on the announcements. There will be this video posted in the announcements, so you can use either one to review. All right, those are the resources. You may take this quiz anytime during week 1 or 2, because I know we got off to a rough start, and it's Thanksgiving, which means something different to everybody right now, and I want to be sensitive to that. You will not be really behind if you choose to wait, because we do go over journal entries and adjusting entries next week. So we slow down, and there will be a lot of this. If you feel comfortable taking the test now, there's no reason with the review that you won't do incredibly well. So it's just a personal thing, and part of it depends on if you have your whole family with you. So I'll post these. Oh, and then the last thing is, because the final exam is cumulative, I'm going to assume that just because you had a bad quiz grade doesn't mean that you didn't go back and learn the material. So if you demonstrate on the final exam that you earn a lot more points there than you did on one of the quizzes, I will replace your lowest quiz grade. It just seems reasonable. You know, you had to have learned it to have done that on the final exam. Because that's what I want. I want you to come out knowing it. And by the way, I was on LinkedIn the other day, and I got a message from a student from National. He had finished his degree. I remembered him. He had finished his degree. He had sat for the CPA exam, and he was finishing up his master's degree. And it was just really neat. I was just sitting there watching something depressing on TV, and it's like, oh, people can message you with that? And who is this? Yeah, it was wonderful. So yeah, it's worth all the effort. Okay. If you have questions when you're working through it, you're welcome to call me. We're not going anywhere. We're just going to put up Christmas stuff. I hope you had a good Thanksgiving. And if I don't see you again, I will see you on Tuesday. Tuesday. Everybody say it with me, Tuesday. And wasn't it more fun with cameras? See, Tuesday. And wasn't it more fun with cameras on? We'll get the rest on. Yeah, because we feel like we know each other. It's easier. Yeah, and plus I can look at you and see, wait, you don't know, we're not ready to move on yet. Because if somebody here has a question, somebody else does. I promise you. All right, I will see you on Tuesday. If you're traveling, please do so.
I'm sorry, I have one question. So How do we review our quiz and our homework that we complete?
I will give you, have you already taken the quiz?
Hmm.
Okay, I didn't realize, I hadn't looked for that. I will, okay, so normally I wait until the quiz is over for everyone and then everyone can see. I don't know what your plans are tomorrow. Why don't you call me and I'll go over yours individually with you? Would that work?
Yeah, that's fine. I just want to know because like I know I missed like one or whatever, or one or two, and so I just want to see what parts I didn't get.
Okay, you know what? Just hold on a second. I'm going to stop the recording. All right, you guys, I will see you on Tuesday. You guys have to go away. I'm not going to kick you out if you don't mind ending. Oh, I'm going to stop recording now. Why aren't you going to tomorrow?